Tesla shares swung from gains to losses on Wednesday to close the session down by more than 3.5%. Its shareholder meeting failing to inspire investor confidence, despite CEO Elon Musk saying the company has a, quote, decent shot at a record quarter on every level. Anthony Ginsberg is the managing director at GinsGlobal Index Funds and is with me now to discuss. Let's start with Tesla. This is a stock that's a real tug between the bulls and the bears. It's had a rather rough start to the year, first half of the year down by around 35%. Of course, a lot of the focus this week on the shareholder meeting.
Yes.
Where do you stand on this stock?
All right. Well, in particular, we actually put Tesla and Elon Musk as part of the Industrial Revolution 4.0. And most of our products that we've got in ETF land all cover a much broader spectrum than just obviously a single stock. We actually see Tesla having pulled Volkswagen and Volvo and BMW all kicking and screaming into the EV, electronic vehicle, alternative vehicle space. So they've done a wonderful job. Obviously, as a volatile stock, we actually have a very, very small weighting in Tesla. Our view basically is that it's taking them longer to produce the numbers of cars that they want. But very interestingly, the one reason we're a bit more bullish on Tesla than others is that Musk has actually got very good Chinese operations, and they're actually going to be rolling out in China a couple of 100,000 cars a year starting next year. So actually, it's not getting a lot of press, but we actually think what Elon is doing in China is getting underreported. And we're right. Sorry, go ahead.
So that's interesting what you say, because I think a lot of the question marks when it comes to this stock is around the demand picture. So if there is stronger than expected demand coming from China, then essentially that could solve some of those concerns. But why do you think you're seeing that differently?
Well, because it hasn't been reported that they've built a very, very large factory on mainland China. What they've also done, living in California where I am, you see Teslas being far more ubiquitously used, not just in Beverly Hills, but actually even in let's say, relatively middle-class suburbs, where you may not think that you're going to be that many different kinds of Teslas around. It's actually become more of a status symbol amongst the middle classes. It's actually a more broadly based car company than many people perceive. I think we all think about the $80,000 Tesla. The majority of Teslas I see in California and on the East Coast in the US are not the $80,000 ones. It's the cheaper ones. And I think as they get the price level down below $50,000, they will be able to turn the company around. So we actually are not as pessimistic about Tesla going forward.
All right, let's talk about some of the IPOs that we've been seeing this year. Obviously, the very high-profile ones within the ride-hailing space, most notably Uber and Lyft, possibly failing to inspire a lot of confidence there. We have seen Uber actually rise back above that IPO price now, but its first few weeks of trading have been challenging, to say the least. What kind of signal do you think that this sends to other companies that may be looking to float?
All right, well, that's quite an interesting two-part question, because on the one hand, you could argue that the easy money on Uber was made by all the private investors pre-IPO, and they all used the IPO as a wonderful exit strategy. And perhaps in a normal course of events, if it hadn't been since the 2008 recession, maybe a company like Uber would have gone public a lot earlier. So perhaps the unfortunate part is by the time they went public, there was so much hype already that the easy money had been made by the time it went public, with many companies, including mutual fund firms, buying them on the private market. Our view actually is that because we own a cloud ETF, firms like Uber and Lyft have been able to scale up dramatically into 70, 80 odd countries very, very quickly because of the infrastructure of cloud computing. And what's not getting much publicity is all the ecosystems and below that Uber and Lyft are relying on, and even the likes of Airbnb and Netflix are also relying on a lot of cloud computing technology. So we launched a cloud ETF as a usage here in Europe, because actually a lot of the play that's pushing these guys globally to expand as fast as they are the cloud companies. So the profits and the money, the actual real profit making that we see linked to Uber and Lyft is actually from the cloud infrastructure rather than perhaps Uber themselves. So yes, I'm not particularly optimistic that Uber is going to turn their profit and loss statement around anytime soon. But what we're focused on as a investor in cloud is that they're actually utilizing people like Amazon Web Services and other huge cloud operators such as Microsoft in a massive, massive way. And the cloud companies are actually the major beneficiaries at the moment.
So are there any kind of cloud companies that are public right now that are really benefiting from that trend that you talk about that we should be looking towards for opportunities?
Well, very much so. Actually, if I had been sitting here 2 years ago, Microsoft would have been worth half of its current value. So Microsoft has gone literally from about a $400 billion market cap to almost $900 billion market cap, largely based on their cloud infrastructure and what they've rolled Windows in very, very cleverly in the last couple of years. But they've just done a deal last week, Microsoft with Oracle, to do with cloud. And now you've seen Google make the biggest cloud acquisition in their history also last week. So there's a lot of activity there. IBM, some months ago, spent the $35 billion, their largest acquisition in their history, to buy a hybrid kind of cloud company which allows the movement of data between the big cloud platforms. The biggest challenge with cloud up until recently was that you had these separate silos of 4 or 5 big cloud companies, but now with the sharing of private cloud and public cloud together, we call it the hybrid, there's a lot more adoption by multinationals. So we actually see a lot more usage of cloud beyond just the easy stuff. So yes, the emails have been outsourced to cloud, but it's the next 20 to 30% that's very, very exciting. It's driving a lot of the cloud growth. And also, incidentally, as you read about hack attacks and cybersecurity challenges, that benefits cloud companies too. So where I am in California, when Hollywood was hacked by the North Koreans, right after that you saw Sony Pictures, Warner Brothers, a lot of these guys outsourcing an incredible amount of data, realizing they're not in the IT business. So cybersecurity and cloud are themes that have actually commingled and are benefiting one another, actually.
And that kind of brings me on to another point, which is the divide that we see within the big US tech sector between sort of B2B businesses and B2C businesses. And from what you're saying, it sounds as though you see the opportunities more on the B2B side.
Well, generally speaking, there's a lot more economies of scale that can be generated there. So a firm like Amazon is now generating 60% of its net profit from its cloud business, the AWS, which is not commonly known. I think people think Mr. Bezos is making most of his profits from my wife and other people filling up their driveway every day. So there's a lot going on in the B2B space. Interestingly enough, in the consumer space, people like Netflix and Airbnb, certainly without the cloud, could never have grown to the extent that they've grown. So I will just say one other quick thing. The whole fourth industrial revolution, we talk about different themes, future cars, we touched on cloud. So we have a product called Innovative Technologies, where we've said, it's very difficult to know which one of these themes at any one moment is going to shoot the lights out. So we've actually equally weighted them in a particular product, an ETF, that essentially has blockchain, cloud, cybersecurity, future cars, gene editing, all basically in there as an equal weighting, as essentially a low risk, low cost access point for people to say, I want to buy some of this disruption, but how the devil do I do it in a low-risk manner? So we are really believers that you can index technology or these themes in a broad-based manner rather than just buying the FANGs. I think the challenge has been, you're talking about B2B, the challenge is that the FANGs have got some regulatory risk. We actually think that they're reasonably fully priced. They can't make massive acquisitions. They're under a bit of an antitrust, anti-monopolistic cloud in Congress in Washington. Although I'll tell you a secret, the interesting thing out of California executives in Silicon Valley, if you talk to them, they're less concerned about the antitrust investigation. They're more concerned about GDPR, which is your European privacy regulation coming on board into the States. And California, as of January 1st, 2020, is implementing essentially GDPR. And I think Washington will then most likely grandfather the California legislation across the country.
All right, so in terms of the investment or trading opportunities within big tech, obviously the tech sector has been performing broadly pretty strongly for a significant number of years now. My question really is, how much longer can these gains last? Because we're more than 10 years on from the financial crisis. We know this is a very cyclical sector as well. Is it too late to get in?
Well, not when you look at the number of viewers spending their hours per day on television versus social media. So one of the themes we also cover is social media, and actually the advertising dollar spend has gone literally from less than 5% on digital social media sites. It's now reaching about 30%, we project, by next year. So what we've seen is more and more spend going into digital. The social media space is probably the most dynamic area. I will just say, when you look at cybersecurity, you look at cloud, there's a lot of engagement going on with M&A. So there's a lot of even things like video gaming. Former competitors such as Xbox, which is Microsoft, and PlayStation, which my kids use from Sony. We always thought never the twain shall meet, but the two of them are now agreeing on a cloud platform so that online game streaming is going to occur. I think the point for us is it's beyond just the FANGs. I think for us, we see that the challenge for European and UK investors is to not get sucked in and just be buying a very narrow spectrum. We actually think that the FANGs are fairly fully priced, and if you go a level or two down to the mid caps and even some of the small caps, that's where the big premiums are. They're being taken out, they're being bought and acquired at major premiums. It's happened with this firm Red Hat that IBM bought at a literally 100% premium to their previously priced share price.
Any names in particular we should be looking at?
Yes, so the ones that we really like, but again, this is part of a very broad index. We've typically got between 50 to 80 stocks in our cloud and in our innovative technology. In the healthcare space, there was a huge deal. Bristol Myers bought Celgene, which is one of our holdings. It was trading worth about 50 billion. They bought this thing for close to 80 billion some months ago. We actually like the healthcare disruption space. We call it health tech or healthcare innovation. This is linked to robotic surgery, to gene editing, having your DNA examined. You can actually now do it, instead of having to spend $10,000 getting your DNA and your gene sequencing edited, you can now do it for next to nothing, but about a couple of $100s. So we see customized medicine as being a huge area, and there's quite a lot of activity in the healthcare innovation space. So we launched an ETF recently covering that area as well.
All right, Anthony, thank you so much.
Thank you.
That was Anthony Ginsberg, Managing Director at GinsGlobal Index Funds. I'm Victoria Scholar, and thank you for watching IGTV.